5:30, so we're going to call the meeting to order. I guess we'll discuss possibly approve minutes of the March 10, 2022 special meeting. Entertain a motion.
Motion. Second.
Motion's been made and seconded. Discussion? No discussion. Call for a vote.
Shropshire,
Yes.
Nance,
Yes.
Smith,
Abstain.
Okay, we have a workers' compensation presentation by Brown and Brown. So you gentlemen have the floor.
Well, we appreciate you all having us here today. What we're going to go over is the workers' comp policy for the city. So everything that we're going to show you in here is going to come from the city's work comp policy, the loss runs, and your modifier sheet. There are no names on here, so there's no personal identifiable things in here. But what we want to show you is some of the value that Brown and Brown can bring to the city. We contacted the mayor about doing a workers' comp review because we understand that the property and the auto insurance is best placed with OMAG. Most of the cities in the state are there, so that's where it should stay. But where we can help you all is on the workers' comp side of things. So that's where we specialize in our company. So I kind of want to go through this and again show you some of the value that we can bring to the city, but also some of the overpayments and issues that we found that we can help resolve, and then be able to help the city in the future. So what I'm going to do is, I'm going to sit down so I can get into the microphone. So what we're going to do is do a quick about Brown and Brown, who we are. We'll go over your current policy, some of the claims issues that we found, a historical look back, and then what to expect on the August 1st renewal for 2022, and then our findings and next step summary. So this is going to be some pretty in-depth stuff, so if there's any time that you need me to stop, please let me know. I want this to be fully transparent so where everybody's on board and following along with what I'm doing. So a little bit about Brown and Brown. Our office is here in Pryor. We're on the north side of town, but we are part of the 5th largest insurance brokerage in the world. We've surpassed $3 billion in revenue, over 400 employees worldwide, in 7 countries, United States, Canada, Bermuda, England, Ireland, a couple others internationally. So the nice thing about that is that you have the ability with Brown and Brown to have this national buying power of such a large agency, but also somebody who's local. The gentleman here with me is Tommy Harvey. This is our vice president. He runs the office. He lives in Claremore. I live in Claremore. Our office is here. Most of our staff lives in Pryor, Choteau, Adair area. The employee benefits division already does the health benefits for the city. So we already have a working relationship there. So we want to bring our expertise on the workers' comp to help the city. Again, this is kind of what I talked about. It's a national buying power. It's the 5th largest in the world, but we're headquartered here in Oklahoma, just up the road. Something interesting about our little office here in Pryor, we're the largest insurer of native and tribal business in the world. So we have the Cherokees, the Creek Nation, Chickasaws, the majority of the tribes, we have them. The only one of the big 5 that's kind of a dated term, but the Choctaws are the only nation that we don't represent. Everybody else has been a client for ours for many decades. And again, we've represented the city on the employee benefits, and we've represented Pryor schools for close to 70 years now. So we are ingrained in the community. As far as some key differentiators about us, subject matter expertise, we're going to go into that. Again, any broker can tell you all these things, but we want to actually prove to you what we can do that brings this whole thing transparently and also allows you to have control over this. Workers' comp is the only line of insurance that you have any control over. If property rates go up, they go up. There's only so much you can do. Same with auto insurance. But work comp, you have a lot of control, but not many people know that. So what I want to go into is our current policy, our current modifier, and show you some of the overpayments and claims issues that have increased the premiums on the city substantially. This is a very busy sheet, so I'm just going to give you the basic things here. So the first thing is this purple arrow, and when we go into these claims, this right here is a summary of Oklahoma's work comp state statute. It's Title 85A. So this is the state work comp law just put into a little infographic. The big things that we're gonna talk about here are injury codes when we work on this modifier sheet. Sixes, which you'll see here in a minute, those are medical-only claims. So here are the two important things I want you to remember. When we talk about medical-only claims, those will have a 6 next to it, and I'll show you exactly where that is here in just a moment. Those medical-only payments get reduced by 70% on your modifier. So when you have a penalty, or when you have a claim, if it's medical-only, when they produce the modifier that they use on your work comp policy, that gets reduced by 70%. Medical-only claims are good. Those are okay. When you have a 5, those are little indemnity claims, which are medical claims and some lost time, little owie claims, if some people have called them. They're just, maybe somebody misses a couple hours or a couple days of work. If that happens, you lose that 70% reduction in that penalty. So 5s are not good. 9s, we really won't go into those. Those are surgeries. There's nothing you can do about that. So 6s and 9s are okay. That's what workers' comp is for. But those 5s are what drive up your modifier and they drive up your premium. And the problem is they stay on your worksheet, your modifier, for 3 years. So 5s and 6s are really what we're going to focus on today. And then the second thing is that top purple arrow. In the state of Oklahoma, you can get up to a 25% credit on your policy or a 25% debit. That's completely up to the insurance company unless you have a broker who negotiates that for you. That's another big thing that we're going to talk about that was left on the table. So we're really going to focus on injury codes, and we'll go into this into more detail. So one of the things that we point out is this is a current client of ours, and we call it a perfect modifier. And it's not perfect because it doesn't have claims, and we'll look into how to read this. But this is an account that has close to $18 million in annual payroll, a couple hundred employees. It's a big group. You would know them if you found out who this was. All of their claims, they have 18 of them over the last 3 years, they're all medical only. So when you see an IJ with a 6 next to it, those are medical only. So this claim, this company has 18 claims, but they're all medical. So what does that mean to us? So that's where you would find the injury codes. And just doing the math, the total penalties that the carrier paid out on this example was $9,734 in actual medical bills. You reduce that by 70%, which is that medical reduction, that would only come out to $29.21, which is shown right here. So that just proves that even though the carrier did pay $9,700 in claims, this company is only being penalized on their modifier $29.21. So again, it's a big company, couple hundred employees, all 18 of their claims are medical only. So that's just showing you that this actually works. It's not smoke and mirrors. So this was the worksheet that we worked off of when we did all this. So where that green arrow is, that says that rating reflects a decrease of 70% medical only. That is just saying medical only claims get reduced by 70%. They're just doubling down on that. You'll see this on every single modifier. All this really is a fraction when they give you your modifier. This top box is what your actual claims were, and then you have your expected claims, what the industry average would be. They have averages for police and fire and how you go about that. So we are just under average. So we're going to look into some of these claims.
And this is your specific one. This is your modifier.
Oh yes, I'm sorry. City of Pryor Creek, and then the municipal board is. So again, this is all of our information. So when we dig into these claims, we're able to go back all the way to 2016. And what you'll see here, and kind of what the theme of this, is that you can see in these loss columns, this IJ, those are those injury codes that we talked about. You see a lot of 5s. So in our lingo, we call these small 5s. So the carrier paid a total of $2,075 on that claim. They paid a total of $363 on this one. That's how you read this. So you go through this. This year the carrier paid $247 on that claim. $19.29 on this one. Those are all little claims that lost that 70% reduction. So you'll see those are surgeries, nothing we can do there, and those are medical claims. These are okay. There's nothing you can do about those. The 5s are what are driving up the modifier for the city. And your premiums are substantially higher because of that. And again, when we look into this, that purple arrow is where you'll see the injury codes when we talk about 5s and 6s. So last year, the modifier was a 1.44, I believe, and this last year it was a 0.99. It's a pretty significant savings from last year, but it wasn't because of anything the broker was doing or rates going down. It was simply the claims finally fell off. We'd paid them off after 3 years, they went away, and then 19 and 20 came on. So your worksheet is just a 3-year rotation of claims. So it's on a 3-year cycle. And then we focus on those for the claims. Okay, so without even getting into the claims, focusing on some kind of basic math here so you all can follow along. When we talk about this mod, you're going to hear me use the term points. Okay, that doesn't mean anything to you. What it does mean is that every time your modifier goes up or down a point, your premium is going to increase or decrease $2,919. Okay, so that's just 1% of this. Okay, so that's why you have a $2,900 credit, because our modifier is a 0.99. So if our mod goes up a point, we're going to pay $2,919 more, right? So anytime I say point, I just want you to think $2,900. Then keep in mind that those claims stay on that worksheet for 3 years. Okay, so this is a long-term impact of how this goes. So on the current policy, there is a missing credit of $28,898 at least. And here's why I say that. When I talked about the scheduled credit that a carrier can give you, up to 25%. In the 7 years that I've been doing this, and the 15 years that Tommy's been doing this, we have never went to CompSource and asked them for at least a 10% credit and never got it. I've seen the city's safety manual, return to work. I've talked to it's 75 pages long. We have foremans for every division. There is no doubt at least a 10% credit should be applied to this policy. It's simply just your broker asking for it. There's no justification that it shouldn't be on there. So if we took 10% of this number minus that credit, it's 10% of that's $28,898. So last year, this current year, that's a $28,000, let's just call it $29,000 overpayment that the city had on the workers' comp policy, simply by not asking the broker, or the broker not asking CompSource to apply that. We're the second largest writer in the state with CompSource. We have the ability to get that done, and the city has the ability to get that done. You have the plans and procedures in place. It's just the ability to have a broker that knows how the workers' comp system works and how to represent the city. So that was one concern, and then we looked at last year's policy, same deal. So this was 2020, 2021. Again, there was no credit on that last year. So 2 years ago, that was a $42,000 savings that was left on the table. Again, the decrease last year was simply the modifier coming down. Really, you paid off the claims. So over 2 years, that's close to $61,000 in premium that was overpaid simply because nobody's paying attention, nobody's asking for it. At a minimum, we'll get that 10% credit put on there. At least 10%. We can push for more, but we've never been turned away with at least 10%. So that's $61,000 right there that the city has overpaid without even looking at the claims. And one thing that I've heard some people come back with that as well is because we had a lot of claims. They won't give us a credit. This is an Oklahoma account. They're not too far from here. Their modifier was at 1.67 last year. So they paid $278,000 in the debit because of that modifier, but we still got them a 10% credit. So if you had that credit, it would show up as scheduled rate modification. You don't have it anywhere on here, right? So if we did have it, that's what it would look like. So we saved this account $69,000 last year, and they've turned in over $1 million in claims in 5 years. This year, we got CompSource to keep the credit. That was another $82,000 that we saved. So we've saved this group close to $150,000 over 2 years. and their claims are worse than the city's. So the fact that you all had claims has nothing to do with this. You all can still get this. It's just you have to have a broker who's gonna ask for it. So going into the claim, so here's what we're gonna do. When we talk about these claims, we only focus on the claim number. Whoever was hurt does not matter to us. It just does not matter, we don't care. All we do is we reference the claim number so you can see it on your modifier sheet. That's the only reason that we even ask for those. So we're gonna start out very basic, and then we're gonna work into bigger numbers, but I just wanna show you the basic math here. So this individual claim, if you were to look on your loss runs, would be 5787 is the last four numbers. The carrier paid a total of $363, okay? 202 of that was lost time. That's just regular payroll, right? Had they never been hurt, we would have just paid their salary. They paid 161, the carrier paid 161 in medical bills. So 202 plus 161, that's how you get your 363. Now, if this claim, here's where we're gonna help you all. Had we continued to pay their salary, put them on light duty, put them in a return to work, and continue to pay their salary, and let CompSource, doesn't matter who the carrier is, but it's just CompSource right now, pay the medical bills, that 161 would get reduced by 70%. So the penalty on this claim would have gone from 363 down to 48. That would have reduced the total penalties by $315. Now, as far as impacting your modifier, it doesn't. It would have lowered it 0.16. That is not gonna affect it right now, but what you're gonna see is over a 3-year span, this is gonna add up to something pretty significant, okay? So, working into the next one, now we're gonna start seeing some movement. So the carrier paid $31.98, 2,200 of it was lost time, $970 was medical, okay? What we would have done is recommended continue to pay their salary. This isn't a catastrophic injury, so we know it's not a surgery. Continue to pay their salary at least for the first week, if not 2 weeks. Buy ourselves some time. Had we paid their salary, let the carrier continue the medical, that penalty would have only been $291 as opposed to $31.98. That would have lowered our claim by $27.37, which would make our modifier a 0.98. So that's 1 point. 1 point is $2,919, and that stays on the modifier for 3 years. So over the 3-year lifespan of this claim, the city is gonna pay $8,757 in additional premium because the carrier paid $2,226. You're gonna see a common theme here that may seem like a lot of money, but you're almost gonna make it up every single year that following year, and you're gonna almost double or triple your return on 3 years. So had we paid that $2,226, our net overpayment, we could have saved $6,531. That is net overpayment that the carrier is just, that's how they make their money, is things like this. Again, this is a small indemnity little owie claim that I think we could prevent. That's a big deal. This one was 2017-2018. It's a little bit bigger. Now this number can seem scary and go, okay, why would we still want to continue to pay their salary? Well, this is just another example. The carrier paid $15,000, let's just call it, and $5,000 in medical. Had we continued to keep this employee on light duty, continue to pay their salary, let the carrier take the medical stuff, the penalty would have only been $1,500 as opposed to $19,700. That would have lowered the modifier by 6 points. So at the next renewal, we would have saved $17,000 had we continued to pay their salary. But since we didn't, or we weren't advised to, over the 3-year lifespan of this claim, we're gonna overpay $52,542. So our net overpayment on this claim alone is $37,850. Again, this one is another small one from 2018-2019. Again, carrier paid $248. They paid $65 in lost time. That might be 3 hours of work, depending on the division, right? But an hour or two maybe. 183 in medical. Had we paid that $65, that would have reduced the penalties by 192. Now again, it didn't affect the modifier yet. It was 0.12, so it's a fraction. But remember, there was a 0.16 before. So now we're at 0.28 when we bring those two together. So this is the problem of even these little ones, because it stays on there for 3 years. They start to add up. Claim from 1920, you can kind of see this. The total was 1929. The carrier only paid $1,400 of lost time, maybe a week, again, depending on the division, maybe a week. We would advise you to continue to pay their salary, let it be medical only. That would have reduced the penalty of this claim by $1,784. That's a 1 point impact on our mod. So because the carrier paid $1,445, we overpaid $2,919 the next year, $8,757 over the 3-year lifespan of this claim. So our net overpayment on this one was $7,312. Another way to think about it, the carrier made $7,312 off of this one over the lifespan. Now, this one wasn't on the modifier, so we're not really sure what happened, but the fact that somebody got paid $4,700 in lost time, but only $73 in medical, that's very strange. We don't see that discrepancy. Usually it's 1 to 1, 1.5 to 1, but let's just say that we continued to pay their salary, that penalty would have only been $22 as opposed to $4,819. 1.60 on the point impact, so that's 2 points. But the thing about it is either this claim was reported late and maybe it got reopened later. This is not on the modifier, so this is saving us 2 points. So this is actually benefiting the city. Had this been on the modifier, it would be 2 points higher than it is right now. So we got away with this one, but that one is very strange. Now there's a chance that this one might show up next year. We don't know, but if it's missed, don't say anything. We're benefiting from that one. That's about $6,000 right there that we benefited from. Now, before we got the new modifier, we were looking into the future. So one of the things we can do is, if we're your broker, we can help the city project what the modifier is going to be 6 months before it comes out. So that will help you all in budgeting to kind of have a general idea of what to expect come August 1st. So this claim was from 2021. You'll see it here in just a minute. Again, you kind of see the theme here. Carrier paid $1,486 in total. 1,000 of that was lost time, a couple days off work, right? $416 in medical costs. We would have advised you to continue to pay their salary, keep it medical only. Now, this is where everything kind of comes to a head. This one would move the modifier by itself 0.49, but then you add that 0.16 and that 0.12 to it, that has pushed it up over. So those three combined have increased the modifier. So even those little tiny ones will add up. So because the carrier paid $1,000 here, $2,919 this current year, and over the 3-year lifespan of this claim, another $8,757. So we also looked back, so this is 2021, we look back to 16, 17, same deal. Now this fell off this year, so this one is gone and away. Again, $1,300 in lost time, maybe a week. Again, depending on the division of the city. We would have told you continue to pay their salary, keep it medical only. This increased our modifier. Again, we just got done paying this one off. So we overpaid $8,757 on this one. The carrier paid $1,300. So that is a 5-year look back. So what we always like to do is kind of do a summation of what we just did. So we went over 7 of those small indemnity claims individually. And all we did was just add them up together. Okay, so we have the year and the claim number. So in total of all of those claims, we had 7 of them. The carrier paid out in total $29,000. 21,000 of it was lost time, 8,000 of it was medical costs. So what we would have done is said, hey, continue to pay their salary. Had we done that, the penalties would have been $2,402 instead of $2,906. That would have reduced the penalties in total by $26,604. Had we been the broker, your modifier would be closer to a .90. It would be 9 points lower. Another way to think about it, the claims are being mishandled right now, and that has driven up the modifier 9 points higher than what it should be. So to kind of put that into perspective, 9 points over a single year is $26,271 that the city overpaid. And over the 3-year lifespan of all of these claims, we're going to have overpaid by $78,813. Net overpayments, had we continued to pay the salary, we would have advised you to do so, the city would have net saved $57,812 just on the last 5 years of claims. Another way, if you're financially minded, what would be our return on investment? Well, had we paid that $21,000 in lost time, and again, this is over 5 years, this is 2016, so it's not every single year, this is over a 5-year span, we would have net saved ourselves $57,812, and over the 3-year lifespan of those claims, we would have seen 175% return on our investment. Another way to look at it is your carrier is seeing 175% return on their investment. That's why they love these indemnity claims. But that's not exactly the carrier's fault. It doesn't matter who the carrier is. This is just having a broker who's going to help you all through the claims process, to help you with a return to work program, a light duty, all those things we can do. And there's no fee to it. It's just part of what we do. The carrier, doesn't matter who it is, have loss control people. It's part of the premium. They'll send them out and they'll help you build a return to work program for the police, for the ambulance. So every single division has their own manual. It's just having somebody who's wary of this, who knows how the system works, and is on top of these claims and being proactive. So as far as what you all should expect August 1st, this is the actual modifier that came out. So this came out after we did our initial review. It is now 1.01, so you should expect about a $6,000 increase just on the modifier come August 1st. Now remember, we saved ourselves 2 points from that claim not being on there, so it could be even higher than this. So without taking any kind of payroll or rate considerations into it, just the modifier compared to last year, the projected renewal premium as it is now would be somewhere close to $262,000. So I would tell you now, I would budget for that, and I'll just give you 4 months heads up. This would be a conversation if we become your agent that we're having in January. You'll have 6 or 7 months to plan this out. So kind of the summary of what we went over. The modifier went up by 2 points. We just showed that. Just on the last 2 years alone, we overpaid by $29,000 and $42,000 by not having that 10% credit. Again, that's just the broker not asking for it. At minimum, we would get that 10% credit put on this policy. We went over those 7 small indemnity claims. Those claims issues have driven the modifier for the city up by 9 points, higher than what it should have been. And over the lifetime of all those claims, the city will have overpaid by $57,812. You've got $671 up top, 57 here. So we're talking lifetime overpayments just from what we went over today, in excess of $115,000, $120,000 that the city has overpaid. And it's all avoidable. It's very simple stuff that if we become your agent, these things won't happen anymore. So as far as next steps for the city, we're going to be real upfront and transparent about it. We would like to be hired as the agent to represent the city for the workers' comp policy. We talked about OMAG. It's in the city's best interest to deal directly. That way you don't have to pay a fee to deal directly with OMAG. If you hire us as the agent, you can still come to us with the OMAG stuff. We're your advisor. We're here for you no matter what it is. But that would be a consideration, is to deal directly with OMAG on that side. So we would like to help set up with the carrier a return to work program, a light duty. You guys have the framework for it. You've got a 75-page safety manual. We can build off that. These other post-claim issues. Another thing that we have in our office, we have a claims manager. So anytime there's a claim, we handle it. So we're gonna take that off the mayor's assistant's desk to where she doesn't have to deal with the claims and following up. We handle that from the beginning. We have a weekly claims meeting in our office. So if anybody has a question about where a claim is, when the last time somebody saw a doctor, we'll have a report every month to tell you where everything is. So we can take that off Ms. Malone's desk. And again, none of this costs anything. There's no fee, there's nothing. The insurance company pays us just like they pay your current broker. But when we get that 10% credit, we would earn less than your current broker, but we want to be your agent for the next 35 to 40 years. That's our game. It's a long-term game. And we want to be able to build up a long-term savings pool when we get that 10% credit. So if this year it's $26,000, take that credit, set it aside in a reserve fund, and just pay those little indemnity claims out with that. If we spend $10,000 this year, we've still got 16 left over, and then we can continue to build on. That will allow us to build a long-term savings for those indemnity claims just by asking for a 10% credit. Very simple. This is just building a better mousetrap. Once a quarter, we'll sit down and we'll do a claims review. The gentleman in our office will be able to do that, give you updates on open claims, where we are, status reports, and then a mid-year modifier projection. So in December and January, you'll know what to expect on the renewal. You'll have a budget to at least work around. And then as far as this year goes, we could potentially explore additional workers' comp quotes for the city. I would just tell you that there's a very good chance that it stays where it's at. CompSource writes a vast majority of the municipalities in the state, and there's a reason for it. But if the board would like to, we can certainly go for additional quotes, but there's a good chance, like I said, that CompSource would stay as the most competitive option, but we'll leave that up to the board to decide. So really in closing, our big ask of you is to give us a chance. We are asking for you to terminate the current relationship that you have and allow us to be the broker, hire us and let us represent the city to CompSource. And we want you to save this. Use this as a stewardship report, if you will, to grade us. If in 2 years, because this takes time to turn around, but if in a couple years it turns out that everything we told you is a lie, it's all smoke and mirrors, and this is just sales gamesmanship, then fire us. We're willing to make that offer. But in the years that we've been here with Brown & Brown, never once have we ever had to give an account back, because this is how you hold us accountable. And if we don't do our job, you can prove it to us. So this takes the whole process and makes it completely transparent. It puts some control in the city's hands over your costs, how the claims are, and reducing the overall cost of your insurance program. So that is our ask. I'll open it to the board, or if there's any questions. I know we went over a lot of information, so I mean, please, I can go back if I need to.
Mr. Mayor?
Thank you, Mr. Chairman. I was in private business for a long, long time and understood when you're responsible for payroll, when you're responsible for taking care of the insurance benefit for many employees, then you do that. You do that. When Chris came and made a cold call to mayor and said, would it be all right if I talked to you about workman's comp? I said, you bet.
Mm-hmm.
You bet. You know, and so where we went from there was I asked him if he could evaluate claims, evaluate our program that we've been doing over the last few years. And so Lisa Malone, who handles that part of our inner workings in our office, supplied that information for him. Then he came and made the presentation to me, and then you were in
Yes.
on that presentation, Choya.
Mm-hmm.
And I don't want us to think that that who we have been with, that they've been putting the screws to us. They're business people, and I don't have any animosity toward them. They've done us a good service.
Mm-hmm.
They've done us a good service. But I think that there's some significant savings, having come to a point of understanding of this program. There's significant savings. At the end of the day, we serve every citizen. We serve every citizen, and I think the good stewardship is to send this recommendation to council They'll make that same, the same presentation to council tomorrow night if y'all pass this. So thank you for your time. Thank you guys for your presentation, for your time. Appreciate it.
Any discussion? You guys want to send it to council?
I make a motion, we send it to council.
Okay. Okay, the motions,
I have one thing that we need to fix on this, on number 4.
okay.
I accidentally put the word carrier. We are not changing the workers' compensation carrier, it's the broker.
Okay,
That's just a scrivener's error that I can fix on my end, but
that's fine.
I need to plain note that.
Okay, I have a motion and a second that we carry this on to council tomorrow night. Call for the vote.
Nance?
Yes.
Smith?
Yes.
Shropshire?
Yes. Thank you.
All right, thank
Thank
you
you
all
for the
very much.
presentation. Okay, discussion and possible council action regarding requiring a City of Pryor Creek license for serving complimentary alcohol beverages at salons within the city limits. I hear a motion.
Motion. Second.
Okay, motion's been made and seconded. Discussion. Okay, what we have here is, it looks like if the way it claims here is that an ABLE will issue a license to businesses which involve retail sales or provide services to its clients, including but not limited to furniture stores, art studios, nail salons, hair salons, cigar stores, clothing stores, bridal shops, and business-supported services. Okay, so they are not going to be selling alcoholic beverages in their buildings. This is just a complimentary, no more than 12 ounces of wine or 24 ounces of beer per day per customer. So that's the maximum amount that will be there. Okay. If they have an ABLE license, which you can see in your packet that there's a application for fees for that. And it seems like the complimentary beverage license fee for the state looks like to be $100. Okay. If we decide to make this an ordinance and go forward with it, I think one of the things we need to talk about is, do we need to have a city permit to go along with the state permit? That gives the city a little more control over what happens and what goes on. Also, there's a possibility that this permit will have a fee on it. I don't know what the fee will be. We haven't discussed that. That'll have to go before council. But what we need to decide is whether we want to send this forward to be able to give, it's basically the state's already approved it. It's already been approved because you can get this license through ABLE. And do we have a reason that we don't want to make this available to the people in Pryor? Any discussion? Hearing none, Mr. Mayor?
Give me a minute to think about this.
Okay.
We have a new business who are trying to be innovative, and they're also trying to cross all their T's and dot all their I's. Since we already have the ABLE Commission who has a way to permit, I don't see any reason why the city should do a permit. It doesn't make sense that we should ask a business to double do what the state already does.
Okay. I had it put before me that if we had a city ordinance on it, then that we would have control. And then I asked the question, well, who controls the alcohol or whatever that's inside of a business? And they say the ABLE Commission. I thought, well, then why do we need to control over why do we need to control here at the city? Because our police officers and stuff aren't going to go in and control that. That has to do with the ABLE Commission. And the only way that the ABLE Commission would come down is if somebody had a complaint that maybe they were in there and somebody was drunk or whatever. That would be the only thing you'd have. So I guess what we need to do is we need to forward this to council. Will, Mr. Ritchie be there tomorrow night?
Yes, Mr. Rich will be there tomorrow night. You could, yeah, you could either, not forward it to council and it dies.
Right.
If you forward it to council, it makes it it would make it a discussion item, an item to
Right.
either approve or not approve. So you can do one, you can do
Well, as it
either
is,
one of those things.
as it is right now, is it legal now to do it? Whether it goes before council or not, does the city still have to have a vote on it?
No, city does not have to have a vote on it. They're trying, they brought it to the city because, and hats off to them, they brought it to the city because they wanted to cross all their Ts and dot all their Is. If there was a need for a permit, they wanted to approach the city and purchase a permit. But the city doesn't have a permit for a complimentary beverage.
No.
The Able Commission, the state does, and why should we ask them? Why should we ask them to purchase a permit?
Okay.
Or why should we
Right.
create a permit for them to purchase? Because there's already a permit through the state. So,
That's right, because we don't sell a permit for people to sell alcohol out of a
Restaurant.
liquor store, restaurants or whatever there anyway. We don't have that.
well, we do have permitting.
For liquor by the drink in restaurants and stuff. And
And-
the only reason you have that is due to the fact that you have tax dollars involved.
That's correct, that's
Right.
correct.
But
This
as
is
far as,
complimentary, they're not selling anything.
right, there's no tax dollars involved here. The only taxes that would be involved here is if they bought the alcoholic beverages in the city limits, they would have to pay taxes on it wherever they bought it.
Yeah, they would be paid for it, and if they offered them, just like offering a soda, offering a,
Sure.
so.
But the rules and regulations are pretty well stipulated inside of this, you know, you have to be of a certain age. I don't understand part of it, but the part I don't understand is, you know, it says here, you can't do it under the age of 18, okay?
Right.
So that's state law, isn't it? So.
Yes, it is. Now, I have heard comments like this, and I've done a little bit of checking around. I've done some asking around.
Mhm.
I've heard one grandmother said, well, if they're offering alcohol in a salon, I'm probably not gonna go to that salon because if I take my 6-year-old daughter or 8-year-old son
Mhm.
in there, I would rather them not be,
Subject.
you know, subject to that.
Well, my,
That's
my-
their,
What
my
we have,
question is,
what we have right now is we have restaurants that serve alcoholic beverage,
Mhm.
and you go into the restaurant and you take your children into the restaurant, so do you boycott that restaurant because they serve alcohol? You know, I'm not sure that that's maybe a valid argument.
main thing I'm trying to do is cover all of our legal bases to make sure that we've done everything that we need to do to
Sure.
cover our legal basis. And like you say, this is already a state, it's a state law. So, and, I mean, you can put in for a permit, so we absolutely do not have any control over that, nor do we want it to have control over that, so.
so they really didn't need to come here tonight to talk to us about this at all.
No, not really, but.
In my mind, why do we have to do something that the state says okay? Just because the state says it's okay, we're gonna go and do it?
That's a good point. If the state says okay, then we do it, but the state statutes will supersede the local statutes.
Yeah.
In most cases.
Right.
In
We've
most
already gone
cases.
through this with the COVID crap.
Yeah, no kidding.
That's another,
So-
that's
Why-
another discussion.
Why would we subject, I mean, I understand what these ladies over here are thinking about, and I absolutely love the idea of the food truck deal, but I don't see any need for them to have to push alcohol on anybody.
No, that,
Oh, well, you don't have to push it.
they're not wanting to.
Well, they're
That's
not
just-
pushing it, but they're gonna have it there available. It's basically the same thing.
Well, they're not pushing it, they're making it available.
But it goes back to my original statement. Why do we have to do something just says the state says it's okay to do it? There's not a need. But these ladies didn't even have to come here tonight at all anyway, apparently. They could just go ahead and do this and we couldn't do nothing about it anyway.
That is correct.
So if we take no action on this tonight, and if we don't take it to the board or to the council,
There's no real need to because they can do it anyway.
yeah. So I guess that's the route we need to find out, is we
But
wanna
we
take
are
it to
aware.
council or
That's
do.
all it's basically done is make us aware
you-
that it
Yeah,
can
it makes you aware, if you want to send it to council and make it a discussion item in council, that would be up to the,
But if the council even decided some way that they decided no, it wouldn't make any difference anyway,
it's true.
because it's a state law and they have the right to do that.
So I appreciate them wanting to do things the right way.
Go through the motions, yeah.
And go through the motions and bringing it to us. So,
That's right.
thank you, Mr. Chairman.
Thank you, Mayor.
Okay, what's your pleasure?
We can send it to council if you want to, but like I said, it's not gonna make any difference.
You guys just wanna go no action? I mean,
I don't wanna send it to council, I don't think we'll know.
okay, all right, so I need a motion to
I'll make a
either,
motion not to send this to council and leave as is.
okay. All right, motion's been made and seconded to take no action and leave it the way it is. Call for a vote.
Smith,
Yes.
Shropshire,
Yes.
Yes.
Okay. All right. So the next is discuss possible recommend council action regarding the amendment of the city code provision 7-1-13 to provide flexibility of development provision relative to complete streets program. I have a motion.
Make that motion.
Second?
Okay, motion been made and seconded. Discussion.
Okay, this was brought up on the street committee because Buddy Glenn was concerned about one section of the city putting in sidewalks and another section of the city not putting in sidewalks. And then we find out that we have two ordinances along the same lines. Buddy's concern was that on this, was it Fifth Street, Sixth Street? Sixth? Okay, they're not putting any sidewalks in. He's building some new residences. And it was brought to Buddy's attention that the possibility of these people buying these houses down the road that could come back and ask us 10 years down the road, we want sidewalks. Well, according to this ordinance, that doesn't necessarily have to happen. Once it's decided by the city on the initial contract that they're gonna either put in sidewalks or not put in sidewalks, that determines whether sidewalks could be available later on down the road. And in this case on Sixth Street, there's no sidewalks whatsoever. So these people they can ask, but it won't happen.
Can I speak to this one also?
Yes, sir. We have the availability on a sidewalk going from nowhere to nowhere. And
Yeah.
so that's part of the issue also.
The way that city attorney recommended that we deal with this, in the 7-1-13 complete street, section of the complete streets ordinance, in item B, section 2, he added the word, and you can see that highlighted in your packet. He added the word "or project" and struck subsection B3, and then referenced paragraph 3. And on the next page, he did the same thing. He inserted the word "or project." And so in making the change to the wording, what we've done is we have basically updated this complete streets ordinance. And Now we don't have the conflict.
Also, we'll have, with the two ordinances put together, we'll still have the availability of going out for
Grants.
grant money,
Grant money, that is correct. That
if
is
it
correct.
comes available. And
Thank you.
according to Buddy, we've actually used this in the past and we didn't get any money at all. So,
That's true.
Well, the whole thing is it would look really odd over there where those new houses are built to put in sidewalks because there's blocks and blocks around there that there's no sidewalks available. So it would look awful
plus,
odd, you know.
plus the lots are pretty small size lots and it'd
Mhm.
take up a lot of,
Take up a lot
kind
of
of
front
wasted
yard.
area in a sense.
Yeah, it would. So, any more discussion? All right, so I need to,
Recommend council action.
well, it's gonna, yeah, we're gonna have to recommend council action, but it's not tomorrow. It would have to be
Right. so
at a later date. Yeah. Yeah, so we need to make a motion to recommend council action at a later date.
I have a motion by Smith and second by Nance.
Okay, do you wanna change it? Okay,
Yes.
So we can put it on the agenda for meeting after next?
probably so, yeah. Well, it wasn't on tomorrow's, so
Right, that's what I'm
we'll
saying.
have to
So
go after that.
we'll put it on the meeting after, so it'll be 2 weeks from
Right.
Right.
19th. Okay, 19th.
So we'll make a motion to put it on the meeting at the 19th.
Sounds good.
All right, call for a vote.
Shropshire,
Yes?
Nance,
Yes.
Smith.
Yes.
Okay, so that one passed. Okay, as far as scheduling the next meeting, we'll just have to schedule it as needed. Okay, motion to adjourn.
Motion.
Second?
Motion's been made and seconded to adjourn. Call for a vote.
Nance,
Yes.
Smith,
Yes.
Shropshire.
Yes. Thank you. Thank you all for coming.